Hey everybody, Brian Lar, One Life Financial Group. Welcome back to our Money Marathon series where we're having some fun using running analogies and stories to explore how you could potentially get more mileage out of your hard-earned money. Today I'm kicking off a new series where we are going to share 7 risks of running your wealth marathon alone without any support. Each video is going to walk you through one risk that both marathon runners and investors can face, and then you'll also learn about some strategies and tactics that could help you extinguish those risks. And my hope is you're going to uncover at least one meaningful opportunity each week that could help you to secure your future, minimize your tax bill, maximize your wealth so that you can run your best money marathon and live your best life. As always, thanks in advance for liking and subscribing. So let's jump in. Today, we're going to cover the first potential risk of running that money marathon without any support. And that risk is this: your plan could crash. So let's talk about runners who face this same risk, and then we'll talk about investors who face that same risk in their money marathon. So with running marathons, why are there so many marathon runners vomiting between miles 22 and 25 of a 26.2 mile race, or they're getting pulled off the course? And you might be saying, well, it's a long way to run, and I agree. But actually, for many of the runners, they didn't have the support of a coach who helped them calculate what pace they could sustain for those 26.2 miles. So basically, what happens is these runners go out at a pace that's just not sustainable. They burn through all of their precious glycogen stores, and that's a fuel source that their bodies would ideally use to run fast for the duration of the entire marathon. And once they run out, they essentially hit the wall or they crash. And ideally, every runner would know what pace they can sustain, and it's very similar to investing. So runners would have ideally the support of a coach who could help them calculate their marathon paces for various conditions, hot weather or cold weather if they're feeling healthy, or if they're a little bit injured, the course difficulty, how hilly it is, the wind, and that way they kind of know what range of paces should be sustainable based on their situation, their stress tests that a coach would put them through. And so coaches will often put runners through a lactate threshold test. You can actually see a picture of me on the screen with a mask on and getting my blood drawn every few minutes to figure out what pace I could sustain. And other tests that runners do are like a fast finish long run or a half marathon race, and then use those results as a baseline to figure out a marathon pace. So what's this have to do with your money, with trying to secure your future and run your best money marathon, where ideally you cross the race or you cross the finish line at the end of your life, and you're not broke, and you've lived a great life along the way. You've crossed through all of the checkpoints that you want to cross through with your financial life goals. Okay, so just like marathon runners, I have not met one investor who wants to run out of money or financial fuel and crash. Similar to marathon runners, investors should know their spending threshold paces, and that's just how much money they can spend in any given year while maintaining a strong probability of success. My personal preference and where I feel good is if clients have a financial plan with at least a 75% probability of success. Ideally, it's 80% or more, using historical back testing when we stress test their plan. And we want to stress test it for different types of situations: good markets, bad markets, lower Social Security benefits paid out, higher taxes, higher inflation, if somebody lives too long, so that their eyes are wide open moving forward. So ideally, they can feel confident. If I had a client whose desired spending pace resulted in a 50% probability of success, that doesn't mean their plan will fail, but it suggests that their plan could be at risk of crashing if they don't receive some favorable financial returns in the market with their investment strategy. But it's better to see a lower score or a lower probability of success and then be able to adjust the spending pace, just like runners can do after they receive their stress tests. So there could be this ideal goal, and then you do a stress test and you find out that that pace might not be sustainable, but I believe it's much better to know that ahead of time so you can adjust pace and potentially prevent hitting that wall and crashing. So both runners and investors, in summary, if they don't have the support of a coach, or if they don't do stress tests and know how to interpret those results, they could be at risk of crashing or just worrying about their money, worrying about what pace they can sustain, whether it's running a physical marathon or a money marathon, and worried about how much you can actually spend without worrying about running out. So the next step for running a money marathon or mitigating, extinguishing that risk is just this: develop a financial plan. Stress test that plan for different conditions, bad markets, good markets, different tax rates like we had talked about. And if your probability of success is less than you'd like it to be, then it's time to roll up your sleeves, get to work, and figure out how you can increase your odds of success. So if you don't have the tools to customize a financial plan, to stress test your plan, you can contact us, request a free consultation, and we'd be happy to help you. Whew. Okay, we got the tough one out of the way. Your plan could crash. So it's time to have some fun next week, where we're going to talk about another risk, one that I hope you're facing. Way too many investors I meet have plenty of resources. They've worked hard for their wealth, and worry is just holding them back from actually enjoying the wealth they've created. If you or someone you care about has accumulated a meaningful amount of wealth, but worry is holding you or holding them back from enjoying it, stay tuned for next week's video. It was great being with you today. Thanks again for liking and subscribing. We'll talk to you soon.